Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Nvidia's NVDA stock. Right now we're going to analyze two articles, to where the first one is titled, Where Will Nvidia Stock Be in 1 Year? Clearly we're going to be going over their upcoming catalysts and their price targets as well as their price predictions over the next 12 months, so we're going to do a deep dive into their overall financials just to see how impressive this company could perform over the next year. After that, we're going to be moving on to our second article titled Nvidia, Other U.S. Chip Stocks Stall Over Valuation, Industry Worries. So we're going to take a look at the macroeconomic environment regarding various U.S. chip stocks and how Nvidia is anticipated to try to dodge the volatility happening in this overall industry. So with that being said, if you own Nvidia stock or want more videos on Nvidia, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Nvidia, ticker symbol NVDA, is up around 2% today, and if you invested into this company a year ago, you have been healthily rewarded. The share price of the semiconductor giant is currently up around 223% during this period. However, this is leading some to wonder whether or not this high-flying stock will end up crashing in their overall share price, or if they can sustain their current momentum through the next year, and that's what we're going to be talking about. Right now, the stock trades at around 106 times earnings and 33 times sales, which is an astronomical valuation for both their PE ratio as well as their PS ratio, and these accounting ratios indicate that this company could be considered overvalued. However, we are going to have to discount these overall accounting ratios by their growth rate, which we will do later in this article. So the current PE of 106 times is way larger than Nvidia's historical 62 PE ratio, and ideally we would want these metrics even lower. When going over to their price to sales, historically they had a 13 PS ratio at the end of 2022 to right now they have a 33 PS ratio, and ideally again we would want that substantially lower. So it's not surprising right now for investors to take profits on these major gains for Nvidia, because a lot of investors don't think that the current momentum will be able to keep up with the overall share price, thus causing the NVDA share price to crash. However, I think this could be a huge mistake potentially, considering that Nvidia has sustained terrific long-run growth momentum. And it seems that analysts and other financial reporters think the same, considering that Nvidia has a 12-month median stock price target of $623, according to the 44 analysts who are covering the stock. And this would indicate a 42% jump from their current price of $418 if you were to invest right now. So let's see how this future price prediction and price target actually holds up against their overall financials. Right now, Nvidia's primary catalyst is artificial intelligence, and specifically data centers. Nvidia's data center business is one of its largest growth drivers right now, to where the company's revenue in the first two quarters of fiscal 2024, which is the 6 months that ended June 30th of 2023, jumped by 38% year over year up to, listen to this, $20.7 billion. Their data center business produced $14.6 billion of this, meaning of the $20.7 billion, which translates to just over 70% of Nvidia's top of the line, meaning that the majority of the revenue is coming from data center business. It's also worth noting that Nvidia's data center revenue jumped from $4.3 billion in fiscal quarter 1 up to $10.3 billion in the following quarter. So literally, this has been a huge increase in their most lucrative revenue segment. But now let's talk about various cloud service providers and artificial intelligence, as well as Nvidia's overall graphics processing units known as GPUs. Many commercial companies worldwide are trying to utilize artificial intelligence, which will need to be ran off of very high-powered graphics processing units and other various technological components, which Nvidia can give to them. This would include Nvidia's H100 processors, to where each of Nvidia's H100 processors is priced at around $40,000. However, depending on the configuration, they could even be worth around $70,000. And if we pair this with Nvidia's massive market share in AI processors, this will lead to gigantic overall revenue growth, considering their market dominance as well as their overall pricing of these H100 processors, which are being used in AI. So this is very good news for Nvidia investors, and this is going to act as a phenomenal catalyst, which will catapult Nvidia to becoming stronger over the next year. According to the Financial Times, they estimate that Nvidia is on track to sell 550 100,000 of its GPUs in 2023. And if we assume the average price of each unit, like we said earlier, is $40,000, that would translate to $22 billion worth of revenue in this segment. This indicates that Nvidia's data center revenue could also jump substantially in the second half of the fiscal year, and this is precisely what analysts are saying and are preparing for. Nvidia's fiscal Q3 revenue guidance of $16 billion would equate to a 170% jump over the previous year. But it gets even better, because when we look forward into fiscal 2024, we can see a whopping 190% year-over-year increase in revenue, up to $17.5 billion according to analysts' estimates for various respected segments. So when we combined all of this, the company could bring in an annual revenue of $54.6 billion. So let me say that one more time. The company could bring in $54.6 billion, equating to over a 100% spike for fiscal year 2023. And this is what investors should be excited about. We shouldn't be surprised to see Nvidia deliver on these performance metrics, or potentially even bring in better numbers than these projections, because the company expects to at least triple their shipments of their H100 processors in 2024. And the Financial Times estimate that they will ship up to 2 million units. So just do the math. It's going to be absolutely absurd how much money Nvidia is going to bring in for their top of the line. But let's quickly walk you through the math. Assuming that Nvidia ships between 1.5 to 2 million of their H100 AI GPU focused processors next year, and we're saying that each of these GPUs will be worth around $40,000, that would equate to a range between $60 billion to $80 billion that they could bring in for 2024. So that's why analysts see at least 40% more upside potential in Nvidia's overall stock price and their current share price, to where high-end price targets of this company could reach $1,100 in 2024, equating to a 150% price target increase from their current share price. This would also be able to radically lower their overall accounting ratios that we mentioned earlier, to where their forward price to sales ratio would lower to 20, which makes this company much more attractive to investors. And that would be despite a $1.6 trillion market cap, which is up 50% from their current levels. So overall, Nvidia, even though it has surged in their overall share price, the growth runway that's ahead of Nvidia over the next 12 months is absolutely silly in how much money they are about to bring in, and investors really need to pay attention to this. That's why even other companies like AMD will also surge off of this overall enthusiasm, because Nvidia can only sell so much without losing at least some market share to other major companies. Overall, I am very excited for Nvidia and the AI revolution to continuously fuel the stock market, and if you want to be a part of that journey, then you need to look further into Nvidia stock and other companies like it. You should also be aware that semiconductor stocks in general are anticipated to do extremely well over the next 12 months, which would include other artificial intelligence stocks. But now let's talk about this Reuters article, considering the macroeconomic environment we find ourselves in right now. Some investors believe that the shine surrounding Nvidia stock right now is going to wear off, and this would include other US semiconductor companies, which have had stunning rallies in 2023. However, as investors continuously weigh the risk to reward regarding their steep valuations, as well as when they compare it to increasing Treasury yields, this is a bad sign for growth companies or even technology stocks in general. The chief investment strategist over at Baker Avenue Wealth Management said that they have definitely lost some momentum. They go on to say many of these chip names got that AI boost, some of that fervor has kind of simmered down, end quote. And actually, I'm going to disagree with him. Yes, from an investor psychology standpoint, some people are taking profits right now because they don't think these companies could go higher. But I'm here to say that these companies indeed will go higher, and I have the math to prove it, which we just went over. On top of that, let's look at some valuations, considering the S&P 500 semiconductors and the semiconductor equipment industry group, which was trading at 28.5 times their forward 12-month earnings estimates compared to the 10-year average PE of 16.5 times, which indicates that yes, this industry is receiving a lot of money because investors are betting on the future growth of these companies. However, like what we said for Nvidia, these companies are anticipated to grow so rapidly and so absurdly quickly that their finances will be able to match and keep up with, or even exceed in some cases, these overall accounting metrics, which is very positive. That's why we have seen such an impressive increase in so many semiconductor and AI related stocks compared to the S&P 500. And if you're a smart investor, you would want to get in on some of this action. Now, please be aware that the volatility in these overall investments are going to be very reactionary. So we could see major upswings and deep downswings before they start to level out, especially since valuations of these companies in their market cap are coming under further pressure from the rise in Treasury yields. And normally when Treasury yields and bonds and all of that go up, you see more risky stocks tend to go down, which would include growth and technology stocks. And that's exactly what we saw on Wednesday when the yields jumped, with 2-year yields hitting 17-year highs after the Federal Reserve signaled a policy of interest rates staying higher for longer. This threw a wrench into the overall economy and stock market, and it forced people into these much safer investments. However, for me personally, I'm going to jump on the opportunity to buy these semiconductor companies and AI-related stocks at cheaper prices. On top of that, we also have some macroeconomic tensions going on right now between the United States and China over semiconductors. Following export controls last year to cut China off from certain semiconductor chips made anywhere in the world with US equipment, this has become a problem of concern for various companies and investors. Meanwhile, we also had the initial public offering of ARM Holdings, which has dipped down in their overall share price because they are a very lucrative chip designer. And always feel free to take some profits off the table, especially if you can recuperate your initial investment and then let the rest ride for the long term, because anything from then on is going to be pure profits for you, and then you can take your initial investment and invest it somewhere else. But with all of that being said, I still think that technology growth stocks and AI stocks are primed for future growth. Please be aware of the volatility that is going to impact this overall space, but in the end, Nvidia, AMD, Palantir Technologies, and other stocks like that are set to perform very well over the next year. If you want more videos just like this one, go ahead and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.